What's up, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's happening with Tesla SPY in the overall markets. I'm also going to break down some very important factors to watch for and why on earth there's going to be a lot of interesting volatility coming to the share price and potentially even a short squeeze depending on how many factors go from FOMC to Tesla's big data. But just note that I'm not a financial planner, so make sure you take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. You deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on invested cash. So offer ends very soon in just a couple of weeks, in just 2 weeks from now. So check it out before they run out. Anyways, looking at Tesla, let's talk about these patterns. So one thing worth mentioning about Tesla is that when you look at the way this thing tends to move, it loves to form these inverse head and shoulders. If you look at the last couple of weeks, we had this left shoulder forming right over here. We had a head forming down here, and then a right shoulder forming. If we break past this resistance at 235, we could be looking for this imbalance to fill, pushing us into the 250 area. Now, if we were to end up dipping and losing this 215 area, I would be a little bit more concerned, but so far Tesla's looking pretty good. I also want to mention that if you look at the last couple of weeks, Tesla's also been holding this trend line very, very nicely. So if you draw it out like this, you could see that Tesla's been continuing to ride this higher and higher and holding its key supports over and over and over again for the last couple of weeks. So it's holding this yellow trend line of support and it's doing a great job so far. So this shows that we've been on a temporary uptrend. Now, when you look at the pattern, the inverse head and shoulders, typically that does lead to upside for Tesla. If you look at this historically, I'm going to show you the last couple of weeks. Look at this right over here. Tesla formed an inverse head and shoulders right over here. Then we saw this big rally to the upside. You guys could see it quite clearly. And then right here, there's another one. So right about here, we had one that formed just about here. This one also led to upside. We had an inverse head and shoulders. This led to some temporary upside for about 3-4 days. So it doesn't always mean that because we form an inverse head and shoulders, we just rally forever. It could just be a temporary rally for just like a week or two. So that's what I'm talking about. I'm not saying Tesla's going to rally for like 6 months. I'm just talking about, for the next couple of weeks, we have big catalysts ahead of us. There's an inverse head and shoulders here panned out very nicely. So that's your evidence that this pattern does love to play out on Tesla. It's very, very common. And so far, we're forming a very, very nice one. So this is what the 4-hour time frame is showing us. When we go to a bigger time frame, such as the daily, okay, the same thing. We have the inverse head and shoulders, but then this opens the doors for more upside because we have this resistance on Tesla, right? Around 230 and also 235. It's very, very tough. It's very stubborn. Every time Tesla's hit 235 for the past month and a half, Tesla has rejected. But if we manage to crack past 235, we get a good catalyst. We could be filling this gap up here towards 246 and eventually reach the 250 resistance. There's a good chance Tesla will achieve that if we get the catalyst we need. And the next one is going to be the FOMC meeting. So that's what we're seeing for the daily. It looks a little bit more bullish, but we haven't broken key resistance yet. The weekly looks pretty strong on Tesla. So this has a lot of potential as well. But I also want to call out that there's a giant inverse head and shoulders also forming. This inverse head and shoulders is forming on like the weekly as well. So this could be like our left shoulder area here. This is like our head, and then this could be forming a nice accumulation to push higher. It's always a possibility, but I'm not going to worry too much about like 4 or 5 weeks out. I'm just talking about the next 2 weeks out. So, what is going to be affecting Tesla? What's going on with the share price? What is going to cause this thing to rally? I want to give you guys some answers about this and what may even cause this to fail. So, as of right now, Tesla's respecting an uptrend. We're holding support very, very nicely, continuing to make higher highs and higher lows, but we're struggling to break past that 235 area. So we'll see if we could break that or not. The next big catalyst for the markets is going to be this. On Wednesday, we have the FOMC meeting, and that's going to be huge. Okay. Now, one thing worth mentioning is that there are catalysts that affect the whole market. It's going to affect SPY, it's going to affect the QQQ, and it's going to affect Tesla very similarly. Why do I say that? Let me show you some proof of that. When you look at the price comparison right over here, this is my price comparison indicator. You guys could see that for the last like 4 or 5 months, I would say even longer, maybe the last like 6 months, Tesla has been moving very similar to SPY and the QQQ. If you don't believe me, check this out. I know it's a little bit small, but just try to look at this very carefully. Tesla was right here back in like May. Tesla was consolidating when the market was rallying, and then Tesla played a game of catch up, so it rallied with the market. Then in July, SPY dipped and so did Tesla. They dipped together. Then in August, they rallied together. They got a dip together, sort of, and then they started to rally again together as I speak. So SPY and Tesla have been moving very similarly for the last couple of months in terms of direction. Look at the QQQ and Tesla. Look at the charts, guys. They look very similar. Look at how the QQQ was dipping right here early this year. We were getting this downtrend. Tesla was also downtrending. Then they started to, bottom together, and then Tesla and the QQQ rallied together. Then they dipped together. Then they rallied together. They came down together, and now, as of the last couple of days, they've been pumping up together. So my point in saying this is not to say that Tesla always follows SPY and the QQQ, but historically, for the last couple of months, the things that are dictating the markets are also dictating Tesla. And the algorithm that is controlling SPY and the QQQ and lots of the broader markets is also affecting Tesla big time. So, what this means is that if Jerome Powell causes the whole market to pump, Tesla is going to follow the trend. If the whole market gets a rug pull, Tesla is going to likely follow the trend unless we get those external catalysts. All right, so that's your evidence right over here looking at the price action. So, with that being said, whether we get a rally will depend a lot on the Fed. Okay, we're going to be looking at their interest rate hike, interest cut projections. In my opinion, we're going to be watching to see if they give us any cuts or anything like that. But right now, the market thinks that there is a 50% chance we get a 25 basis point cut and a 50% chance we get a 50 basis point cut as well for the September 18th meeting. So we'll see about that. But honestly, guys, I don't think that this is the biggest catalyst. I think it has more to do with this in addition to what Jerome Powell says. So if we were to get a 50 basis point cut, I think that the market's going to rally if that were to happen. Okay. And that could cause the market to rally for, many days after FOMC. Now, if we get a 25 basis point cut, okay, the markets could still try to push. It's going to be so, but it also depends on Jerome Powell's tonality. If the guy starts to say that, hey, the Fed has raised rates for a long time, they've kept them at a high, and inflation is coming down, he could start to say something like the Fed is entering a easing cycle where they're going to continue to cut rates, and they give us projections. So, like right over here, we have the projections report that's also going to be coming out. If they give us projections that, hey, the Fed's going to continue to cut and cut and cut, the market may like that a lot, especially if they're in an easing cycle, because when interest rates go up and they're continuing to rise, it's going to have a negative effect on employment, and it's going to enter us into a contraction phase that gets us closer to a recession, if not in an actual recession, very, very soon. And looking at many indicators, there's a very, very high probability we do enter a recession soon. But for now, the market's not going to focus on that. They're going to focus more on the easing. And if Jerome Powell continues to push the soft landing narrative and the Fed cuts and they continue to tell us they're going to be cutting more, what's going to happen is they're reversing their policies, which means that the contraction to the economy will slowly slow down. Okay. And the economy is going to normalize as time goes on, at least, theoretically, right? I know there's other factors that affect our economy, but at least things are not going to be as difficult for companies like Tesla with these high interest rates. And that's why the market is getting ready for that rally. So that's the very important thing you have to remember. Does the Fed keep that very, very positive tone that they're going to continue to cut rates as time goes on? If they do that, if they say that they're entering a new cycle, if they remain more dovish, the market is going to love that. So we're going to be looking for a nice squeeze. Now, what about seasonality, right? What about seasonality? Well, I'm not talking about October. I'm still talking about September. The market is very fast to react. But notice something very important. So historically, during the month of September, what tends to happen to the markets is we kind of like dip, and then we start off on the lower end for the first like 2 weeks. Then we start to rally more before we start to slow down going into October. What I'm thinking is that it might be the opposite. So we basically, if I pull up SPY real quick, if you look at SPY, we basically started off September on a very strong note. So September started, right? The first week was bearish, and the rest of the time we just rallied like crazy. That's a little bit different from this. We kind of dipped a bit, then continued to rally. But then during the last 2 weeks, I think that we could still hold up. And if we do get some kind of pullback because of seasonality, it may happen closer to like the October period. So it might be a little bit delayed. And I say that because If the Fed continues to pump things, the market could hold up for over a week. So we might not be ready for the pullback yet. It may take a little bit longer for that to end up happening. I wanted to just give you guys a warning about that. All right. So for the markets, I'm going to make this very clear about SPY. Then I'll talk about Tesla right after. Um, as you guys can see, SPY rallied really hard, and it's awesome to watch, awesome to play and make money off of it. But the issue is we rallied in a way where like the levels are not as sustainable, in a way where it's going to be very, very tough to kind of like continue to break out like this. So if you draw a trend line kind of like this, you could see that SPY has this very, very key level, and it isn't really sustainable for us to, straight up just break 565 and just keep going from here. What's going to happen is there's going to be some consolidation for at least a couple of days. Okay. There's going to be some consolidation that's entering. I'm going to break down exactly why that is. So, as far as SPY goes, what could happen is, we hit this tough resistance, and every time historically we hit 563 to 565, SPY has rejected. So, we could go for 565, but then there might be a little dip coming. We could dip a little bit and then continue to consolidate and range trade between the 558 area and like 565. And then once FOMC comes, that will be the catalyst to determine, are we finally going to get the breakout? Will FOMC cause this big dump and we start dumping back down into the 540s? Or will the market get what they want to hear from Jerome Powell? If he pumps things, I think that we could be looking for new all-time highs, and SPY could continue to squeeze like this. Now, it sounds crazy, but don't forget, there's lots of manipulation and there's lots of shorts expiring in the market, especially for the week coming up. There's also an inverse, not an inverse central, a cup and handle that is forming on SPY. So it looks more bullish. It looks like it wants to rally more, right? And one lesson to learn about the markets is that it could just keep going. It runs and runs and runs and runs like crazy. It hurts shorts the most. Everyone started buying puts. People started shorting the market like crazy, expecting that September crash. It's early. We may not get a pullback until closer to October. All right. So that's what I just want to say. For the next couple of weeks, this could fuel a rally. So, what's the significance of this? Well, SPY has the potential, if the Fed give us a cut and they maintain a more dovish tone, right? They say that they're entering an easing cycle. Yes, the market could rally more. And then the same thing could be said about the QQQ. This looks bullish, but if I kind of close up these indicators, you will see that just like SPY, we made like a very, very big move to the upside. So, we could draw this out like this. However you want to draw it out. It is possible we kind of like retrace a little bit to retest this trend line into like the 470 area, come back up and kind of consolidate a little bit. But if we manage to break this resistance, the daily kind of suggests something very different. So if you look at the daily on the QQQ, we still have a lot of gaps to fill. If we do rally to 480 and try to break this imbalance is going to be our first target, that 485 area. So we could go all the way up to 485 after FOMC. But if we surpass that, we also have this big gap to fill, which would take us up to 495. So if we break the 485s, we could be looking for this like gap resistance, followed by the gap fill up here. These are going to be some of our targets. We could be trying to push all the way up to where these white lines happen to be. Now, whether or not that happens depends on Jerome Powell. I wouldn't be surprised if we dip back down to the trend line, kind of consolidate for a bit in the 470 area. And then if Jerome Powell gives us that pump, if he maintains a very, very dovish stance and he says that the Fed will continue to cut rates as time goes on, they are entering a more important easing cycle, and they're very confident that inflation is not really much of a worry now. This could fuel a rally to at least this level right here, maybe even higher. I don't know for sure, but maybe higher. We could try to go a little higher before October comes and we start to see the market maybe slow down a little bit. But I'm just trying to say there is potential for this rally to continue and squeeze shorts for longer. We could even try to fill this gap up here on the QQQ. Never say never. So with that being said, okay, Tesla has many catalysts. There are three big catalysts coming up. The first one is the FOMC meeting. It's going to affect the whole market, including Tesla. The second catalyst is going to be Tesla's delivery numbers, which are going to be coming out for Q3. That's coming out on October 2nd, at least as of right now. I think that's when it's scheduled to come out. And then October 10th is the robotaxi event. Those are three big catalysts coming up for Tesla. So one of these could lead to a rally if Jerome Powell pumps the markets. Just hypothetically, maybe Tesla kind of like dips a little bit and kind of consolidates, but that 235 area is very tough. I don't know if we're gonna crack past it. If we do end up breaking this and Jerome Powell causes a rally, If he says the Fed is not only cutting during the cycle, but they have plans to continue to cut more, and the whole market goes bananas and starts to squeeze, Tesla could squeeze approaching the end of the month, approaching deliveries into the 250 area. And this inverse head and shoulders could end up playing out very nicely with the overall market. But then whether or not its deliveries are that good, that's going to be the next catalyst. Will it cause Tesla to squeeze more? Will we get like a rug pull back down? We'll have to watch and see what that leads to. And then the next catalyst will be the robotaxi event. But either way, guys, I do believe that getting closer to October, Tesla could see a rally to the upside. I think there's a very good chance of that happening, looking at how well Tesla's holding up, the inverse head and shoulders, the confluences, and the fact that the Fed is going to be cutting very soon. We know the Fed will cut. I don't know if it's going to be 25 basis points or 50 basis points. If they give us 50 basis points, we're going to rally most likely. If they do 25 basis points of a cut, whether the market gets that rally depends on their tone. So if Jerome Powell says, hey, we're doing 25 basis points now, but we're going to be doing more in the future. We're starting this new cycle of easing. The market may love that, and that could fuel us even higher. So that's my main point right now. So watch for these catalysts, guys. It's going to be very, very big for Tesla the next couple of weeks. I can't wait to see what ends up happening with all these big events. With that being said, I just want to say I really appreciate you guys for listening. There is a lot of potential in Tesla, and the more favorable outcome is us trying to rally because the Fed is going to cut, and Jerome Powell has been very optimistic lately. So yeah, that seems more favorable. For the Monday through Wednesday period, there might be a lot of consolidation approaching FOMC. And then we may get a very, very big reaction by the end of the day on Wednesday, if not by Thursday. So get ready, guys. It's going to be very crazy. And this could be fueling a very, very big move and a big amount of volatility. Tesla's setup is very bullish looking, but we will see if we get the catalyst we need to really start to rally. If Tesla could break 235, if that does break, get ready for another rally for that gap fill and more upside for Tesla. I just want to say that this is a very, very temporary forecast. I'm not talking about 6 months out. I'm not talking about a year. I'm just talking about a couple of weeks out. Well, there's a lot of potential upside for it looking at the setup, but it may not last forever because when October comes, things could change. So we'll see how it goes. But for now, this is what I'm seeing for the charts and the market. Thank you so much for listening, guys. I'll see you guys very soon in not a couple of hours. I'll see you guys tomorrow for another update about the overall market. Until then, I thank you for listening. Have a great day and peace out.